Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently fluctuates around the mid-range, but recently dipped to 32.1 on November 6, 2025, indicating an oversold condition. The Bollinger Bands are contracting, suggesting a period of consolidation before a potential breakout. Considering the forecast for the next week, the price is expected to continue decreasing, reaching as low as $98,600. Therefore, I recommend a short position strategy. Enter a short position at $103,100. Set a stop loss at $105,900 to limit potential losses if the price unexpectedly reverses. A reasonable target price would be $98,600, aligning with the forecast and support level. To refine the strategy, let's incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, and when it rises above 80, it signals an overbought condition. The price is currently near the center of the Bollinger Bands, indicating a potential for a move in either direction. Given the downtrend and the forecast, I suggest a short position. Enter a short position at $102,600. Place a stop-loss order at $105,500, slightly above the lower Bollinger Band. Set a target price at $98,600, based on the forecast and support level. This combined strategy leverages both technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a downtrend from October 29, 2025, to November 11, 2025, with a support level at $3,310 and a resistance level at $3,790. The RSI consistently fluctuates below 50, indicating a weakening upward momentum. The forecast for the next week projects a continued downward trend, with prices ranging from $34.10 to $33.10. Considering these factors, I recommend a short selling strategy. We will enter a short position at $3,470, setting a stop loss at $3,580 to protect against unexpected upward movements. Our target price is $3,310, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, given the overall downtrend and RSI readings, we'll prioritize the short selling signal. The RSI is currently around 39.3, which is not oversold, but the downtrend suggests it may move further down. Therefore, we will maintain the short position at $3,470, with a stop loss at $3,580 and a target price of $3,310. This portfolio combines the trend analysis, RSI indicator, and Bollinger Bands to optimize the position, aiming for high returns while managing risk. Based on the historical data and forecast, XRP shows a mixed trend with periods of both upward and downward movement. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions consistently. However, we can leverage these indicators to create a dynamic strategy. First, we will implement a strategy based on RSI. When the RSI falls below 35, indicating an oversold condition, we will enter a long position at $2.3. The stop loss will be set at $2.21, just below the support level, to protect against potential downside. The initial target price will be $2.41, aiming to capture a moderate upward movement. Next, we will incorporate Bollinger Bands to refine the strategy. When the price touches the lower band, which is around $2.37, we will enter a long position. The stop loss will be set at $2.26, slightly above the lower band. The target price will be $2.53, near the resistance level. Finally, we will combine these two strategies into a portfolio. We will prioritize the RSI strategy when the RSI is below 35, and the Bollinger Band strategy when the price touches the lower band. This combined approach aims to maximize returns by capitalizing on both overbought and oversold conditions while mitigating risk with strategically placed stop-loss orders. Based on the historical data and forecast, BNB shows a decreasing trend. The price has been fluctuating within a range, testing the support price of $950 and a resistance price of $1,070. The RSI indicates that the asset is generally in a neutral zone, occasionally dipping into oversold territory. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential short-term pullback. Considering these factors, I recommend a short position strategy with an entry price of $959. The stop loss should be set at $967 to protect against a potential bounce. The initial target price is $935, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, we can implement a dynamic target adjustment. If the price reaches $935, we can move the stop loss to break even, around $959, to secure profits and allow for potential further downside. If the price continues to fall, we can adjust the target price to $916, based on the forecast. This approach combines the initial short position with risk management and profit-taking techniques, maximizing potential returns while minimizing losses. The portfolio will consist of 70% short position, 20% wait and see, and 10% long position. Based on the historical data and forecast, Solana has been exhibiting a downtrend, with the price fluctuating between support at $152 and resistance at $180. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast for the next week predicts further decline, reaching as low as $147. Considering the RSI values, particularly the oversold levels observed on November 7 and 8 at 29.2 and 32.1 respectively, and the Bollinger Bands showing a contraction, I recommend a contrarian strategy. We will initiate a long position when the price touches the support level of $152. The stop loss will be set just below the support at $147, and the initial target price will be the resistance level of $180. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, it strengthens our conviction in the downtrend, and we will tighten our stop loss to $150. Conversely, if the price touches the lower band and the RSI is below 30, we will enter a long position at $152, with a stop loss at $147 and a target price of $180. A secondary target could be set at the upper Bollinger Band, approximately $211, but this would require a significant shift in the overall trend. This portfolio combines the support and resistance levels with the RSI and Bollinger Bands for a more robust and adaptable trading approach. Based on the historical data and forecast, TRON shows a slight upward trend but with considerable volatility. The RSI consistently fluctuates between 30 and 47, indicating periods of oversold and overbought conditions. The Bollinger Bands suggest that the price is currently near the lower band, implying a potential rebound. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.294. Given the support level at $0.284, we will set a stop-loss order at $0.283 to limit potential losses. The resistance level is $0.309, so our target price will be $0.308. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, oversold, it signals a potential buying opportunity. The forecast price for November 12, 2025, is $0.294, which aligns with the oversold RSI level. If the price touches the lower Bollinger Band, it reinforces the buying signal. Our portfolio will prioritize the long strategy with an entry price of $0.294, a stop loss at $0.283, and a target price of $0.308. This approach balances potential gains with risk management, capitalizing on anticipated price rebounds while safeguarding against adverse movements. Based on the historical data and forecast, Dogecoin exhibits a downtrend with increased volatility. The price has been fluctuating within a range between $0.162 and $0.182, with the RSI consistently below 50, indicating a weakening momentum. The forecast for the next week suggests continued downward pressure, with prices hovering around $0.162 to $0.169. The Bollinger Bands are widening, suggesting increased price volatility and potential for further declines. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the downward trend. My proposed strategy involves entering a short position at $0.169. Given the support price of $0.162, I'll set a stop loss at $0.167 to limit potential losses if the price unexpectedly rebounds. The initial target price will be $0.162, aligning with the established support level. However, given the widening Bollinger Bands, I'll also set a secondary target price at $0.158, the bottom of the bands, to capture additional gains if the downtrend persists. This strategy combines RSI signals, support and resistance levels, and Bollinger Bands analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano has shown a downtrend with recent price fluctuations. The RSI consistently hovers around the 30 to 45 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show volatility, with the price frequently touching the lower band, suggesting potential for short-term bounces. Considering the support price of $0.532 and the forecast indicating a continued downtrend, I recommend a contrarian strategy focusing on short-term bounces. We will implement a strategy based on the RSI, aiming to capitalize on brief periods of oversold conditions. Specifically, I propose a long position when the RSI dips below 30, with an entry price of $0.519. A stop loss should be placed just below the support level at $0.50 to limit potential losses. The target price will be set at the nearest resistance level of $0.545, aiming to capture a quick profit from the anticipated bounce. This strategy is designed for a quick turnaround, leveraging the expected volatility within the established trading range. The predicted forecast price of $0.533 further supports this strategy. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility with a general downward trend. The RSI consistently dips below 40, indicating oversold conditions, while the forecast suggests continued downward pressure. Considering the support level at $3,580 and the Bollinger Bands, a conservative strategy focusing on short-term gains is recommended. I propose a short position entry at $3,690, placing a stop-loss order at $3,760 to protect against a potential upward spike. The initial target price will be $3,590, aiming to capitalize on the anticipated downward movement. To optimize returns, I'll implement a dynamic trading approach. If the price reaches $3,590, I will move the stop-loss to the entry price of $3,690, securing a profit and mitigating further losses. If the price continues to decline, I'll consider adjusting the target price to $3,550. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize profit potential while managing risk effectively. The overall portfolio will be 60% short Wrapped Beacon ETH and 40% in cash for flexibility. Based on the historical data and forecast, Chainlink shows a downtrend with support at $14.7. The RSI consistently fluctuates, but recently dipped below 40, indicating potential oversold conditions. The Bollinger Bands show that the price is nearing the lower band, suggesting a possible bounce. Given this, I recommend a long position entry at $14.7, coinciding with the support level and potential oversold bounce. A stop loss should be placed slightly below the support at $14.4 to protect against further downside, and a target price of $15.9, near the recent resistance, should be set for a reasonable profit. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, consider entering a long position. If the price touches the lower Bollinger Band, it's another confirmation signal. The entry price will be $14.4. A stop loss should be set at $14.1, and the target price at $15.4, aiming for a conservative profit while acknowledging the overall downtrend. This blended approach leverages multiple indicators to increase the probability of a successful trade. Based on the historical data and forecast, World Liberty Financial has shown considerable volatility, but the overall trend appears to be upward. The RSI has fluctuated between 33.3 and 57.6, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased price volatility. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands to capitalize on short-term price movements. We will initiate a long position when the RSI falls below 34, indicating an oversold condition, and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.114 with a stop-loss order at $0.11, just below the lower Bollinger Band. The initial target price will be $0.139, aligning with the resistance level and the upper Bollinger Band. To refine this strategy, we'll incorporate the forecast data. The forecast suggests a gradual increase in price over the next week, with values ranging from $0.134 to $0.149. Given the RSI is currently trending upwards, we can adjust the target price to $0.145, taking advantage of the anticipated upward movement. If the price reaches $0.145, we will consider moving the stop-loss to break even to protect profits. This combined RSI and Bollinger Band strategy aims to capture short-term gains while managing risk effectively. The portfolio will consist of 60% of the combined RSI and Bollinger Band strategy, 20% of the support price strategy, and 20% of the resistance price strategy. Based on the historical data and forecast, Conflux shows a downtrend with significant volatility. The RSI consistently hovers below 50, indicating a bearish sentiment. The forecast prices for the next week also suggest a continuation of this downward trend. Considering these factors, I recommend a short position strategy. Specifically, we will enter a short position at $0.0927, capitalizing on the initial downward movement predicted by the forecast. Our stop loss will be set at $0.0947, just above the top of the Bollinger Bands, to protect against unexpected upward spikes. The target price will be $0.0864, aligning with the forecast price for November 18, 2025. To refine this strategy, we will incorporate the RSI. If the RSI reaches below 20, indicating an oversold condition, we will exit the short position and consider a long position. Conversely, if the RSI reaches above 80, signaling an overbought condition, we will also exit the short position. This combined approach, blending forecast data with RSI signals, provides a robust framework for managing risk and maximizing potential returns. The portfolio will be 60% short, 20% long, and 20% cash. Based on the historical data and forecast, VeChain shows a fluctuating trend with periods of consolidation. The RSI consistently fluctuates around the 30 to 50 range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. The forecast for the next week indicates a slight downward trend, with prices hovering around $0.016 to $0.0157. Considering the current conditions, I recommend a cautious strategy focusing on short-term opportunities. My recommended strategy is a combined RSI and Bollinger Bands approach with a focus on range trading. We will initiate a long position when the RSI dips below 30, targeting the $0.0174 resistance level. The entry price will be $0.0157, with a stop-loss set at $0.0144, just below the lower Bollinger Band. The target price for this trade is $0.0174, providing a reasonable profit margin. Conversely, if the RSI rises above 80, we will consider a short position, targeting the $0.0142 support level. The entry price will be $0.0174, with a stop-loss at $0.0187, above the upper Bollinger Band. This combined approach allows us to capitalize on both upward and downward price movements within the current trading range. Based on the historical data and forecast, Bitcoin Cash shows a volatile trend with consistent support at $472. The RSI fluctuates, recently hovering around 47.7, indicating a potential for a bounce. The Bollinger Bands show the price moving within a range, with the forecast predicting a slight decrease initially before stabilizing around $493 to $503. Considering these factors, I propose a moderately aggressive strategy. We will enter a long position at $488, capitalizing on the support level and potential RSI rebound. A stop loss will be set at $472, just below the support, to mitigate potential losses. The initial target price will be $513, aligning with the previous resistance and a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it strengthens the buy signal. If the price approaches the upper band, we'll consider taking partial profits at $517. The final target price will be $507 if the forecast indicates a downward trend. This layered approach combines RSI and Bollinger Band signals for optimized risk management and return potential. The overall strategy aims for a balance between capitalizing on short-term volatility and protecting against potential downturns. Based on the historical data and forecast, Quant demonstrates a volatile trend with periods of both upward and downward movement. The RSI readings fluctuate between 29.2 and 54.5, indicating oversold and overbought conditions. Considering the support price of $81.5 and the resistance price of $106, a potential strategy could be to enter a long position when the RSI falls below 30 and the price touches the support level. For example, when the RSI is 29.2 on November 6, 2025, and the price is near the support level of $81.5, we can enter a long position at $81.5, set a stop loss at $77.2, below the lower Bollinger Band, and target a price of $91.3, near the upper Bollinger Band. To create a robust portfolio, we can combine this strategy with a conservative approach. When the RSI exceeds 70 and the price approaches the resistance level, we can enter a short position. For example, when the RSI is 54.5 on November 11, 2025, and the price is near the resistance level, we can enter a short position at $84.3, set a stop loss at $88.6, above the upper Bollinger Band, and target a price of $77.2, near the forecast price. This combined strategy aims to capitalize on both upward and downward price movements, minimizing risk by utilizing stop-loss orders and targeting levels based on technical indicators and support/resistance levels. Based on the historical data and forecast, NEXO shows a downtrend with recent price fluctuations. The RSI consistently hovers below 40, indicating a generally oversold condition, particularly with readings below 30. The Bollinger Bands show the price fluctuating within a narrow range, with the lower band frequently touched, further supporting a bearish outlook. Given the forecast for the next week predicts a continued decline to $1.05, I recommend a short selling strategy. Enter a short position at $1.09, placing a stop-loss order at $1.11 to protect against unexpected upward movements. The initial target price is $1.05, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, consider entering a short position at $1.06. Set a stop loss at $1.07 and a target price at $1.05. Conversely, if the price touches the lower Bollinger Band, enter a short position at $1.06, with a stop loss at $1.07 and a target price at $1.05. This combined approach leverages both indicators to enhance entry precision and risk management, maximizing potential returns while minimizing losses. Based on the historical data and forecast, SUN token exhibits a slightly downward trend with fluctuating volatility. The support price consistently remains at $0.022, while the resistance fluctuates around $0.0229. The RSI indicator fluctuates between 35.9 and 50.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential rebound. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $0.0218 when the RSI falls below 30, placing a stop-loss order at $0.0214 to limit potential losses. The initial target price will be $0.0225, aligning with the upper Bollinger Band. If the price reaches $0.0225, we will move the stop-loss to the entry price of $0.0218 to secure profits and reduce risk. Furthermore, if the price continues to rise, we will set a second target price at $0.0229, near the resistance level. This strategy balances risk and reward, capitalizing on potential rebounds while protecting against significant downside movements. Based on the historical data and forecast, TRON shows a slight upward trend but with considerable volatility. The RSI consistently fluctuates between 30 and 47, indicating periods of oversold and overbought conditions. The Bollinger Band suggests that the price is currently near the lower band, implying a potential rebound. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.294. Given the support level at $0.284, we will set a stop-loss order at $0.283 to limit potential losses. The resistance level is $0.309, so our target price will be $0.308. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, oversold, it signals a potential buying opportunity. The forecast price for November 12, 2025, is $0.294, which aligns with the oversold RSI level. If the price touches the lower Bollinger Band, it reinforces the buying signal. Our portfolio will prioritize the long strategy with an entry price of $0.294, a stop-loss at $0.283, and a target price of $0.308. This approach balances potential gains with risk management, capitalizing on anticipated price rebounds while safeguarding against adverse movements. Based on the historical data and forecast, PAX Gold shows a generally upward trend with increased volatility. The RSI indicates that the asset is currently in an oversold condition, with a reading of 41.6 on October 30, 2025. Considering the forecast prices, which steadily increase from $40.80 to $42.20, and the support price of $4,090, a long position is advisable. I recommend entering a long position at $4,080. The stop-loss should be set slightly below the support level at $4,070 to mitigate potential losses. The initial target price is $4,170, aligning with the forecast price on November 16, 2025. To refine this strategy, we will incorporate the Bollinger Bands. The asset has been fluctuating within the bands, and the forecast suggests it will continue to do so. If the price touches the lower band of $3,820, it's a strong confirmation of an oversold condition, reinforcing the long entry. If the price reaches the upper band of $4,380, it signals an overbought condition, prompting a partial profit taking at $4,220. The final target price will be $4,220, aligning with the forecast price on November 18, 2025. This blended approach leverages both RSI and Bollinger Bands for enhanced risk management and profit maximization. Based on the historical data and forecast, ARK demonstrates a downtrend with increased volatility. The RSI consistently hovers near oversold levels, frequently dipping below 30, indicating potential for a rebound. The Bollinger Bands show the price fluctuating within a widening range, suggesting increased uncertainty. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will initiate a long position at $0.294, capitalizing on the oversold RSI and potential for a bounce. A stop-loss will be placed at $0.26 to protect against further downside risk, and a target price of $0.35 will be set to capture a reasonable profit as the price moves towards the upper Bollinger Band. To refine the strategy, we will incorporate a dynamic adjustment based on the RSI. If the RSI rises above 60, we will immediately close the position and secure profits. Conversely, if the RSI falls below 20, we will consider tightening the stop-loss to $0.27 to mitigate potential losses. This adaptive approach allows us to capitalize on short-term fluctuations while managing risk effectively. The support price of $0.316 will also be considered as a potential secondary target if the initial target of $0.35 is reached prematurely. This strategy aims to generate high returns by exploiting short-term volatility and employing strict risk management protocols.